Dumelang. Today I will be doing analysis of transactions. I will start by explaining what credit sales are. Credit sales are sales we have made on credit. Basically, we sold goods on credit. That's what credit sales are. We are selling goods on credit. Now, because we are selling goods on credit, whenever you sell goods or whenever goods are returned by the customers, when we sell goods and when goods are returned by customers, note that four accounts will be affected. For now, we'll just focus on goods sold on credit. Note that we can also sell these goods for cash. But when we sell goods on credit, we will have four accounts that are affected, okay? And we'll just explain them thoroughly just in a moment. For every sale of trading stock, four accounts are affected. Credit sales, for credit sales, the following four accounts will be affected. We will debit debtors control and credit sales. So whenever we sell goods, we on credit, we'll debit debtors control, that is an asset, we'll credit sales, which is income. Both these accounts will be recorded at cost price. Again, why are we debiting debtors control? The business will be owed more by whoever bought those goods, and that is a debtor. Debtors control is an asset. That's why under assets, we will actually increase our assets on the debit side by the selling price of goods sold. And at the same time, we will credit sales. Sales will increase on the credit side when we sell goods, and they will be recorded at selling price. The other two accounts that will be affected will be cost of sales and trading stock. These two accounts will be recorded at cost price, okay? Cost of sales is debited because an expense increases on the debit side. Trading stock is created because an asset decreases on the credit side. You will notice that in all these accounts, trading stock is the only one with red. That is because it is the only account that is actually decreasing. Okay, so trading stock is decreasing, is the only account that is actually decreasing. That is why it is in red. So remember these four accounts. Debtors control goes with sales. Okay, both of them will increase at selling price. However, debtors control will increase on the debit side because it's an asset. Sales will increase on the credit side because it is income. So income also increases on its equity. Don't forget that. The other two accounts that are affected will be cost of sales and trading stock. Cost of sales will be debited whenever we sell goods. And that's one thing I always emphasize. Cost of sales will only increase whenever we sell goods, meaning that it will only decrease when goods are returned by customers, okay? In this case, obviously, we sold goods. That is why our cost of sales will increase on the debit side. But at the same time, our trading stock will decrease on the credit side by the cost price. And that is because an asset is going down, which makes sense, guys. We are selling trading stock. So we are losing trading stock. And when we lose trading stock, we are having less of it. Hence, it makes sense as to why we have to credit it. We credit it because we are losing money, okay? I mean, we're not losing money, but we're losing an asset, which is trading stock. All right, let's get to this part here. We need to analyze the transactions of soccer suppliers that occurred in April 2023, according to the answer book provided. The first transaction has been done for you as an example. Assume that bank has a favorable balance at all times. Now, the example says that the owner contributed 270,000 cash to the business. Now, in that example, two accounts will be affected. The first account will be trading, it will be trading stock because actually I'm lying here. The first account that will be affected will be bank and capital, okay? For that first example there, for the example, not number one, okay, because I'm looking at number one. For the example, two accounts that will be affected will be cash, which is bank, as well as capital. Capital falls under owner's equity, and capital increases owner's equity. That is why we actually debited bank, because we're getting money. We credited capital because capital increases on the credit side. The reason why capital increases on the credit side is because we are contributing. So the owners are contributing to the business. And we have four things under owner's equity. It is capital and income, which increase owner's equity on the credit side. The other ones will be drawings and expenses, which decrease owner's equity on the debit side. Okay. And when you abbreviate that, it will give you side, which is CIDE. Okay, capital and income increase owner's equity. Drawings and expenses reduce owner's equity. And that's why for the first example, under owner's equity, we have plus 270,000. Under liabilities, we will have 0. Okay, under liabilities, we will have 0. And most students take chances by writing in under all the elements. Know that no 3 accounts will be affected at the same time. So when you record everything under all elements, you're telling me that you don't know, and you won't get any marks if you do that. Okay, you will not get any marks if you do that. So to show me that you understand, note that only 2 accounts will be affected at a time. Like for instance, even though I spoke about credit sales, 4 accounts are affected, but at the time, only 2 will be affected. So one will increase, the other one will increase, or the other one will decrease, the other one will decrease, or the other one will increase, the other one will decrease. Okay, and that's how it will be. It will never have all 3 elements affected at the same time. Okay, moving right along. Let's go to the first example now, the one that I've been rushing to do. On the first, it says that soccer suppliers bought merchandise for cash, which is 10,000. 2 accounts that will be affected there. What are they? It is trading stock and bank. What's happening to trading stock? Trading stock is increasing. It will increase on the debit side. What's happening to bank? We are losing money, therefore bank will be credited. What are these accounts? Let's start with trading stock. Trading stock falls under assets. That's why we'll have plus 10,000 under assets. Bank falls under assets. That's why under assets we'll have minus 10,000. Putting it together, it will be plus or minus under assets. Owner's equity will be 0 and liabilities will be 0. Let's go to the third. What happened on the third? On the third, we sold goods on credit to B90 for 5,200. That 5,200 is the selling price, and the cost price is 5,000. The sale of goods on credit affects 4 accounts. Let's start with the first 2 accounts. What are they? It is debtors control and sales. Which one are we going to debit between the 2? We are going to debit debtors control and credit sales. We will debit debtors control and credit sales. What is debtors control? Debtors control is an asset. We will therefore increase assets. Sales is income, therefore will increase owner's equity. And assets will have plus 5,200. And the owner's equity will have plus 5,200. These 2 will increase at selling price. And the liabilities we will have 0. That's not the end. 4 accounts are affected. The other 2 accounts will be trading stock and cost of sales. Which one are we going to debit there? We will debit cost of sales and credit trading stock. Why though? We debit cost of sales because it represents an expense, and we credit trading stock because it represents an asset. So our asset will be decreasing at cost price, and our owner's equity will also decrease at cost price because an increase of an expense reduces owner's equity. Under liabilities, we will have 0. Let's go to number 10. Soccer suppliers received 4,200 from B. Naidu. Which two accounts will be affected there? It is debtors control and bank. Which one are we going to debit between the two? We will debit debtors control. Actually, we will debit bank and credit debtors control. The reason why we debit in bank is because we are receiving money. And the reason why we're crediting debtors control is because the debtor is paying us, therefore debtors are owing us less. Both these accounts are assets. So the plus will be for bank money coming in. The minus will be for debtors control having less people owing us. And the amount for those two accounts will be 4,200. Under owner's equity will have 0. And under liabilities will also have 0. On the 20th, it says soccer suppliers purchase goods on credit from Nash traders worth 6,000 and received 15% trade discount. Please note that you'll have to calculate the amount excluding the discount first. You will take 6,000 Rand, multiply it by 100% minus 15%, and that will give us it will give us 5,100. To record this, you will debit trading stock because you're getting trading stock, which is an asset. You will credit creditors control because we are buying on credit. You will debit trading stock. We're getting more stock. That's what we purchased. And you will credit creditors control. That is because we are owing creditors more money. Under assets, you'll have plus 5,100. Under owner's equity, you'll have 0 because we purchased these goods on credit. It falls under liabilities because we as the business are the ones that are owing somebody else. So under liabilities, you'll have plus 5,100. On the 24th, it says that we paid for stationery, which is 450. How do we record that? You will debit stationery and you will credit bank. Those are two accounts that will be affected. Stationery is an expense, that's why we're debiting it. We're crediting bank because we are losing money. Under assets, you will have minus 450. Under owner's equity, you'll have minus 450. Remember, I said this earlier. Two accounts will reduce owner's equity, and those two accounts will be drawings and expenses. And under liabilities, we will have 0. The same day, what happened? The same day, we received a direct deposit of 3,400 for commission income. Now, when we receive money, bank will be affected. We're getting more money. That is why we will debit bank. What was that money for? It was for commission income. That's why we are going to credit commission income. And the bank will have plus 3,400. And the owner's equity will have plus 3,400. Remember, I said two accounts will increase owner's equity. It is capital and income. Here we end income, which is commission income. Income increases on the credit side, but it also adds to owner's equity. That's why we have plus 3,400 under owner's equity. Liabilities will be 0. On the 31st, it says that we purchased the car worth 200,000 for cash for the owner's daughter, and that is for use and for private use. We purchased a car worth 200,000 for cash for the owner's daughter to use for private purposes. Now, two accounts that will be affected there. Remember, guys, we don't sell cars. We didn't mention that we're selling anything, okay? So because we bought a car for the owner's daughter for personal use, that qualifies to be drawings. We will debit drawings and we'll credit bank because we're losing money. Under assets, we'll have minus 200,000. And under owner's equity, we'll have minus 200,000. Remember, I said two things reduce owner's equity. It is drawings and expenses. That's why we have minus 200,000 under owner's equity. Under liabilities, we will have 0. Balance this off, and that's what you will get. Note that the total of owner's equity represents the net worth of the business. That's why our net worth will be 73,150. All right, guys, thank you for watching. I really appreciate it. Please don't forget to subscribe, like, and comment. I really appreciate it. Khotso.